Fidelity had big news earlier this week, shocking the world this week when it announced it was going to offer zero-fee index funds. Here to explain why this is and why maybe it's not such a big deal, Eric Balchunas, senior ETF analyst at Bloomberg Intelligence, certainly shocking the investing world. So first of all, what is the argument that it is a big deal?
The big argument, the reason it's a big deal is symbolism. It's largely symbolic, right? People forget that money has been flowing to the cheapest products for years and years. You know, we talk about this all the time.
Yeah.
90% of the flows are going to funds that charge less than 20 basis points. So we have a chart here. You can see that's been going on for years. That, to me, is the real story.
Well, but no fee is not low fee, right? I mean,
right.
There is a difference.
So Fidelity, everybody knows them as active. That's another big deal. It's Fidelity doing it. I thought it'd be Vanguard or Schwab. Fidelity, known for active, but us on the inside know that they have a big index fund business. They're second only to Vanguard. They took in in the first half, they took about $30 billion into these funds. And here's the thing, they're already charging 1.5 basis points for some of these funds. So really all they did was lower from 1.5 to 0. That's really 1 basis point cut. Anywhere else, a 1 basis point cut probably goes unnoticed. But because that cut sent it to 0,
right.
And then you can say free, then you can say, hey, it's Fidelity who did it. That's why it was a PR, it was genius.
Wow.
Everybody covered it. It was in USA Today. If it's in USA Today, that just means everybody on earth covered it.
Yeah.
And I think that is really what's important here. And it kind of stokes what everybody thought was going to happen. It's almost like the climax of where we were headed.
Sure.
In that now Fidelity is free.
The logical conclusion,
yes.
Perhaps. And also, there are some ETFs that effectively are already free, right?
Yeah, if you think about ETFs like total market ETFs, they charge 3-4 basis points, like ITOT or VTI. However, they do securities lending where they can lend out their securities to short sellers. They take that revenue, put it back into the fund. They share it with the investors. And essentially, that gets them to perfect tracking. When you get to perfect tracking or above that, you're already free. The problem is no regular investors, when you say tracking, their eyes glaze over. This is something we know is the true cost. But for most investors, they're just stuck on that fee. So I would think somewhere you might see an ETF investor or an ETF issuer say, why don't we not share the securities lending revenue, keep it, and then just charge 0 headline expense?
Right.
I would think that would be something somebody would do given the importance of marketing in this day and age
Sure.
for ETFs.
Just quickly to go back to the Fidelity one for a second. Even though it is just a couple of funds, does it eliminate their margins then? Is it going to have any kind of effect on the business?
No, because Fidelity made $18 billion last year. That's double the entire ETF industry.
Right, we showed that graphic
and
earlier,
triple
yeah.
Vanguard. Fidelity makes a ton on their active. This is a loss leader, right? This is to get you in the store and sell you on higher.
Get us our name in USA Today.
Yes, that's right. The bigger problem Fidelity and everybody else has is a bear market.
Right.
Because a lot of that $18 billion comes from the market going up. Once that source of growth goes away, they're going to be hurting, and that really is the bigger concern for them.